So let's learn about investing. Sorry if the audio was bad earlier. I'm completely stupid and forgot to put my mic on. But my mic is on, so the audio should be better. All right, so let's learn about investing. I hope you guys heard me. I mean, the camera's close, so it should be able. But let's learn about investing. All right, investing. We gotta learn what is investing exactly. What is it? All right, investing. You've heard of it. For some of you, I think it's a high likelihood that you know what investing is. But for those who don't, let's get into it really quick. It's simply just putting money into an asset, expecting your money to grow over time. All right. So I'm gonna put my money into a building, and I expect this building to become way cleaner, way better, way more fancier, and it's gonna be worth a lot more. All right. The value I put in it before is gonna be more value than I put in it when I get out of it after over a long period of time. All right. So it's kind of like trading. All right, I put money into it, expecting it to grow, but it's over time. With trading, it's within seconds, within minutes, within less than an hour or whatever, with less than a month or whatever. Some people swing trade. They trade for a week or 2 weeks or whatever. With investing, it's over a long period of time. So I'm talking about decades. All right, I'm talking about years and years to come. All right, so over a long period of time. All right, but that's what investing is. So how do we exactly get started with investing? All right, it's very simple. We just set an account. Set an account. You guys have a bank account. You don't have one. I really recommend everyone, every single person in the world, every person who's watching this, to the hundreds of people who are watching this, please set and start investing at any age you are. Investing, there is like little to no bad effect to it at all right. Investing is one of those crucial things that I believe every single person in the world should start doing. So what does that mean? That means opening an account, connecting it to a broker, putting that money into the broker like Robinhood or Webull or etc. There's many others, and just start investing, putting money into any stock. And I recommend the S&P 500. All right, you will hear this a lot. The S&P 500 that will never fail you. The S&P is. Oh, I'll teach you what the S&P is actually. The S&P is an index fund. It is the top 500 stocks in the U.S. So all these top 500 stocks in the U.S. are combined together with Tesla, Apple, Microsoft Nvidia being the leading one. So if they grow, S&P will grow. And if like 10 companies fail, you have 490 other companies that will grow, help you bring you back up, all right? So over time the S&P grows. It grows over time. You can go into the charts and see that over time it started from here and it just went grow. Yes, there were some times where it went down, but it caught back up. And you're looking for the long term. You're looking for the long term. So when it goes down, you don't have to worry about that because over the long term, over time, it will catch up and grow further beyond. All right. So open it can get a bank account. Open that bank account. Connect it to a broker. Put money into that broker. Webull, Robinhood, etc. I only know those two off of the top of my memory, top of my head. Put money into any stock you think will grow. I recommend, and what should be like this should be a law, is the S&P 500, top 500 stocks in the US. All right, so the top 500 stocks. You're not just putting one. If you put money into this one individual stock, that's a lot of risk because it may flush down the toilet. All right, it probably most likely won't. The S&P has a proven proven over time that it grows. You can look in the charts, like I said, and see that over time it has grown. Now, after you do this, know that it is for the long term, all right? You're not doing this for the short term for like a year, 2 years, 3 years, 4 years. That's short term right there. 5 years, 6 years, 7 years, 8 years, 9 years. That's short term. 10 years even is a short term. 20 years even. Maybe even 30, maybe even 30. But 20 and less is the short term. We're looking for the long term. We're looking for this a way. This is our way out actually. So you can go about your day and not even learn about trading and just do a regular job with a stable income, everyday income, whatever. But if you put your money into the S&P 500 and just forget about it and over the long term, you can actually retire with that money because some people when they get into a job they're stuck for that job forever until they're like 60. all right? But if they had put money into the S&P 500, if they put money into investing, they actually would have been able to retire at 50 years old or 60 and live 30 years or 40 maybe if anything, or and live the rest of the years being retired and happy and doing whatever they want, all right? Living a comfortable, nice life with their wife or husband, with kids or no kids, just the wife or husband, or grandkids, whatever, it doesn't matter. If they had put money into the S&P 500, they would have retired with a good life, all right? So let's go over the long term. Long term, you want to automate investments, all right? So what does this mean? You want to set and forget. We can put, it's putting any amount a day, a week, or a month, all right? So let's say, I'll say, pick a random number, $250. We get a page, and we can put just, this is just for per month, by the way. So if we just put a little amount of 250 a month is actually a little amount, but it grows exponentially. It grows exponentially. It grows a lot. All right. So let's go over $250. But I recommend putting a lot more into the S&P. I recommend 250 a week. All right. And if you could put more, even more beautiful. I love investing. Investing is so beautiful. It's so simple. It's so good. It's just so beneficial with no downside. All right. It's like winning the lottery without doing any work. But instead of getting the money quickly, it's over time. But let's go over 250. If you put $250 per month, that'll be 30K in 10 years. But if you put it into the S&P for 10 years, you will have a 51,000. That's 11,000 bonus. Yes, an 11 no, 21,000 bonus actually. 21,000 bonus instead of just putting your money into a bank and just letting it sit there. If you put it into the S&P, you'll get a 21,000 bonus over that 10 years, and it'll become 51,000. And oh, side note, real quick, investing beats inflation, so you don't have to worry about inflation. So if you put it into the bank, you're actually gonna get beaten by inflation, and it's gonna decrease over time. All right, so that's pointless. Don't even put it in a bank and just put it into a saving account. Yes, the saving account can grow, but inflation grows, so inflation is going to beat that savings. So but inflation cannot beat the S&P 500 growth. It cannot. It's a 10% return, an 8 to 12% return every year. No, every 10 years. I think it was every year. No. Every 10 years, because this is a 10% every decade. But whatever. Now let's go into 10 years is the short term, by the way. Now let's go into 20 years. If you go into 20 years, you'll have 60K. But if you put it into the S&P, you'll have $189,000. 60K from $189,000. That's 40 plus 89. Oh my gosh. 129 $1,000 bonus within 20 years. And it gets even crazier. I'm gonna stop with the bonus because it gets even crazier. I don't want to do all that math. $250 per month for 30 years, you'll have 90K. Into the S&P, $518,000, $500,000, and that's just per month. If you do it per week, way better. I haven't done the research, but you can research it. Way better. All right. Yeah, that's 30 years. But again, we're not looking for 30 years. 40 years and 50 years, I recommend 50. 40 years and 50 years is the target you want to aim for. But let's go over it. $250 per month for 40 years. You just let it sit there. 120K. And to the S&P, $1.3 million. You're a millionaire. You just became a millionaire. Congratulations. You are a millionaire. $250 per month for 50 years. That's what we're looking for. 50 years is 150K. You saved up 150K. Good job. From 50 years. That is 1 year. That's actually 1.5 years worth of yearly salary. Congratulations. Within 50 years. But if you put it into the S&P 500, let it sit there for 50 years, you would have gotten $3.7 million. $3.7 million. $3.7 million. You are officially a millionaire. You have multiple millions. So when you retire and you look at your account from 50 years, you would have saw that, oh my gosh, I have $3.5 $3.7 million because I started investing. So this is why time is very important. You have to start as young as possible. I really recommend people start at 16, even younger. All right. I pray I wish my mother started investing for me when I was like 1. Because if they started investing by now, $250 per month for me, and I'm almost 20, I would have had $189,000 with no work, with no job at all throughout my entire time of growing up. And 50 years, I would have had $3.7 million. And I started from 1. So that is why is very important that you start very, very young. Start young. So as soon as you turn 18, the first thing is you shouldn't be celebrating your birthday. Oh my gosh, I'm 18. Oh my gosh. No one cares. Honestly, I don't like celebrating my birthday. I don't really care about it. As soon as you turn 18, the first thing you do to truly celebrate how old you are, to truly celebrate your birthday, is to open a bank account, set up that bank account, connect it to a broker, put money into it. All that birthday money you've been given, go to the bank. Hey, bank, I want to put all of this into my brokerage and put all of it into the S&P 500. No, actually, you go into the bank, say I want to put all of this into my bank account. You connect your bank account to the S&P, to the brokerage. Webull, I recommend Webull or Robinhood. Robinhood just as good. It really doesn't matter, not sponsored. And once you put all that money into the brokerage, you tell that brokerage, hey, put it into S&P 500. S&P 500. You should be able. That's a stock index fund, and boom, right there. And that's basically what investing is. It's very simple, very easy, very beneficial. All right. Now we have research. All right. This is a separate thing, but still investing. So if you want, you can research for individual stocks. Now, individual stocks is a bit more riskier, but because it's riskier, but it can give you a greater return. If someone invested $250 into GameStop, an individual stock, they would have become a millionaire like 2023 or 2024, because I think that's when it blowed up, or 2020 and 2023 and 2024 maybe, because one of those years GameStop blowed up twice. And yeah, so in a individual stock is a bit more riskier, but could have a more beneficial return than S&P. But to play it safe, I really, 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 really recommend the S&P 500. So, but if you want to research, you would have to look at income statements, balance sheets, and cash flow statements, and see if they're all good. So this is technical and fundamental analysis. All right. And if you do individual stocks, you will also help get dividends. Now, dividends is this payment of investing in an individual stock. So when the company has this money left over, it divides it into all the people that are investing into it. So if the company has a dividend of 0.5% and you invested in $1, you'll get 50 cents in return. So you invested $1, you just gain a bonus of 50 cents because, hey, thank you for investing in us. Here's some money. Here's some of our leftover money, and that's monthly. Pretty sure it's monthly. So yeah, and I think you do get that dividend with the S&P 500. I'm like 90% sure. I'm pretty sure the S&P 500 have dividends. I'm pretty sure, yes. So but it's greater. But if you can research and find a greater dividend in individual stocks, then boom. Dividends range from like 0.01% to like I think 5% or 10% maybe. It's not that much. Dividends aren't that much. Not even 10%. I don't think. I think like 2-3% is the max. But say I put $100, I'll be getting $2 back. So, but over time they will build up. So because if it's $10 the first month, then $20 second month, you'll be getting $4 instead of $2. Or did I say $100? $200. So dividends is very important, but very helpful. Blah blah blah. So, but it's very risky. I recommend you go into more, learn how to pick stocks individually, which I will go into a video sometime soon. But yeah, that's it for today's video, guys. Thank you so much for watching. And if you like the video, please like, comment, subscribe. Please share with all your friends. And I'll see you guys in the next video. Peace.